Hello, everyone, and welcome to the Green Earth podcast by DGB Group. I'm Pedro, your host, and today we're joined by Melissa Lindsay, founder and CEO of Emstream, a tech-enabled carbon brokerage, and Emsurge, a climate tech startup building a digital market infrastructure for transparent wholesale trading of ESG commodities. In this podcast, we explore the topic of carbon units, their role in over-the-counter trading, and the increasing importance of transparency and quality in carbon unit selection. We also go over the impact of new regulations, the drive for more transparency, and the growing role of nature-based solutions and the carbon market overall. Before we begin, I'd like to share that this podcast is brought to you by DGB Group. As a project developer of high-quality, large-scale, nature-based projects accredited by leading verification standards, DGB's goal is to help nature flourish and prosper by assisting governments and corporations in achieving net zero and investing in nature. To learn more, access green.earth and take the first step towards your sustainability goals. Melissa is an expert in the topic, and I'm very, very happy to have her with me today to teach me one thing or two. How are you doing, Melissa?
Hi, Pedro. Thanks so much for having me on your podcast. Looking forward to having an opportunity to talk about the carbon markets and hopefully attract a new audience.
Well, we're very, very happy to have you here as well. So just so we could get started, could you tell us a little bit about your background? How did you get started in the carbon market?
So I was in the liquefied natural gas market for a very long time. For over a decade, I was the global head of LNG at Tullett and my role there was to build the broking desk and to structure and facilitate the trading of liquefied natural gas. I was doing the physical side of things on a spot and a forward basis, and I was also developing the financial market for liquefied natural gas. I eventually got to a point where I wanted to build software to support me doing my job. The LNG market is very similar to the carbon markets in that it was extremely opaque at the time, very bespoke trades. It didn't lend itself to normal existing trading infrastructure. So I set about designing software, and I designed it at Tullett, but then they allowed me to leave and take the IP with me in exchange for giving them equity in the newco, and that company's Emsurge. And then Emstream was established to be the foundation customer of that tech company. So we launched first in liquefied natural gas. And then in 2020, the LNG market started looking more actively at offsetting the carbon from the liquefied natural gas. And so they were pairing carbon and LNG trades together. So we wanted to look at adding carbon to our platform and really being able to understand what the carbon compensated price of liquefied natural gas was. So I started really getting involved with the carbon markets then. I was fortunate enough, because of my background, to be invited onto the Mark Carney-led task force for scaling voluntary carbon markets. At the time, I didn't really know anything about carbon, but I knew a lot about building liquidity and transparency and tech infrastructure into markets. And yeah, that was a great crash course. There was like 250 specialists in the carbon markets. And one of the things that came out of it was the fact that they felt that there was a need for greater transparency in the OTC brokered market. And for those that don't really understand markets too well, the OTC stands for over the counter. So it's where people trade directly with each other. So if I was to match DGB with a potential buyer, I step out the trade and DGB would contract directly with that corporate or buying entity. The other type of trading is exchange traded, where the exchange is effectively the counterparty to the deal. So the buyer and the seller each transact with the exchange, and it's exchange settled or cleared. So yeah, I've always been focused on this OTC market where it can be done bilaterally without an intermediary, or quite often for the sake of efficiency, an intermediary is there. So where DGB would otherwise perhaps have to speak to, hundreds, if not thousands of companies, we hope to do some of that legwork for companies and and give them access to our client base. So we've got 150 companies on our platform now. These are mainly investment banks and investment grade companies in general, the large energy trading companies, the commodity trading houses, a lot of climate consultancies who are procuring on behalf of the corporates that they advise.
That's really interesting. So in layman's terms, you could say that what you're doing is you're essentially acting like a salesperson for carbon project developers and carbon buyers, correct?
Yeah, I'm a bit like an estate agent. And our platform is a bit like, I don't know if people in their countries have Zoopla or these real estate platforms where you don't click and trade. And in commodities in general, the size of the transaction and who you are trading with is so important that at best, it works well to use a platform when you're buying a house to filter and work out the opportunities you want to pursue further. And I would say that's what our platform is like. So people can see what carbon credits are available from what projects. They can drill down into the projects, learn more about the projects. And then if there's interest, they can pick up the phone and speak to someone. And then we help facilitate that trade.
That makes perfect sense. When was the year that you started incorporating carbon for, you mentioned that first you started incorporating carbon credits for offsets in the gas market, right? So when was that, more or less?
So we launched in carbon in October 21. We made a big push to really launch around COP26. And since then we traded over 10 million tons. The first couple of years, I would say there was much bigger transactions happening. People were trading 500,000 tons, even 1 million tons speculatively. Whereas now you're seeing the demand tends to be a lot scrappier, and the whole market is seeing an average trade size of around 100,000 tons move down to closer to 50 or even lower than 50. We're seeing a lot of people who in the past wouldn't have entertained trades below 50,000 tons doing trades which are below even 10,000 tons.
Oh, that's interesting. What could be the reason for that?
I think when the market and the prices were rising, a lot of people got very bullish and they got very long very quickly. So a lot of people have invested in projects. And so they're now trying to focus on drawing down and selling what's on their portfolio. And you've got a situation where the majority of potential liquidity providers are in the same position. And where prices have been relatively flat for a long time, I wouldn't say they're still falling, but they've been relatively flat for a long time. And interest rates are much higher. There's not really the same incentive to buy and hold credits in the hope of selling them for a higher price in the future. And there's abundance of credit. So, if you need to buy, you can just come and buy those credits in the market versus tying up capital today. And so I think the project needs to be really compelling for someone to want to procure it on a forward basis. Or it's the fact they want to be really involved in the projects. And you're seeing that. I think from a quality perspective, people like to be involved in the projects early on. And so a lot of the large buyers are trying to find projects such as DGB's projects, which they can invest and really help the project get off the ground and finance new quality credits, as opposed to using their demand or their capital to just buy existing stock.
Interesting. So now we're talking more, and please let me know if this is actually the case of the market right now. We're talking of more buyers actually buying carbon units and investing in these projects. These buyers are essentially investors most of the time. So we're not seeing so many, let's say, companies or individuals that are purchasing these credits to essentially use them to compensate for their own offsets. Is that the case?
I think you've got people buying still for their own use case, but some of that demand is kind of lost in the fact that they're securing on a term basis. So it's not coming to the market as spot demand. And then you also have a lot of people who were speculatively buying credits in the past. And I think it's that speculative demand that has come out. People aren't wanting to buy the large tranches, and you get a discount for buying in size. But you can buy in size and then you can sell off smaller volumes to different corporates over time and make some margin there. I think that kind of activity has really slowed down. And so now it's just the smaller buyers, as and when they come to the market, people are back to backing that business into where I operate, which is a wholesale. So, typically we deal less with the small to medium-sized enterprises and the end corporates. We deal with the traders or the intermediaries and I would say the professionals in the market, which are advising companies on the type of credit that they should procure.
That is very interesting. And in that sense, when we're talking about these professionals that are advising the companies on what kind of credit that they should procure, could you tell me a little bit more about that? Are these people like investment advisors that are taking care of my portfolio? Are they sustainability professionals that are looking more towards the actual offsetting of these companies? Could you tell me a little bit more about that?
I think you've got a mix. You've got climate consultants who are advising companies on what their carbon footprint is, on how they can perhaps decarbonize, and on any residual emissions, then how they may use carbon credits to offset those, to compensate those emissions. And then quite often those companies, though, they have their own portfolio. So some people are conflicted, I would say. And, they're doing this and then they're also trying to push their products. And then others are just purely advising people on what their footprint is and how they go about sourcing credits to compensate. And then you've got some intermediaries who just provide access to the wholesale market. So they have the contacts across the board. So a company can come to them to help them source. And that's kind of more like Emstream, my broking company. But this market's a funny one in that there's a lot of brokers who use brokers. And a lot of the brokers work together because it's so highly proliferated, which is, again, why we wanted to introduce tech to it. You actually have a market where there are thousands of buyers and there are, it's in the thousands as well, projects. We've had over 500 projects list on our platform, credits, since we launched. And there's a growing number of projects. So I would say there's a pool of projects which quite often trade and retrade, and there's some liquidity around on the traded side of the market. And then there's a kind of outer ring of projects which maybe trade once or twice. So maybe someone finances the project and then the person who's financing the projects sell them to maybe a trader once who then sells it onto their client, or they sell it direct to a corporate. There isn't this high churn ratio because it's quite niche. Whereas with, say, the large REDD+ projects, which is your rainforest preservation projects, really, then they quite often exchange hands multiple times. And that volume is the volume which is fungible into some of the standardized exchange-traded contracts that you see in the carbon market. So there's a lot of different layers to the carbon market. I don't know if you want me to explain any of that in more detail. I'm trying to blend being brief with giving you a high-level overview, but enough detail.
This is actually so interesting. I have so many questions about this. I'm wondering which one I want to ask next. But what would be the main difference that you would, if there are any, that you would notice between these two different types of projects, the ones that have a higher churn ratio, the ones that exchange hands less times?
I think in many commodity markets, and people have been trying to commoditize carbon. And, my view from being in commodities for a while is that there was this huge trend towards trying to create pockets of possible standardization where you say, this is a pool of credits where there are enough similarities between these projects, and there's enough volume being generated by all of those projects which are similar to create a basket and a focused pool of trade. And traditionally, this has happened in all commodities where people look for pockets of liquidity and then there's a load of opacity around it. It's like the oil market. You'll predominantly hear people talk about Brent and WTI, but there's hundreds of grades of crude which trade, and they generally trade at a basis to those main benchmarks. And so the carbon market over the past few years has been trying to find its equivalent of Brent and WTI. And I don't think there is a successful product yet that will stand the test of time. But yeah, for the time being, those products which have had liquidity, the projects which can supply into those baskets, they're the ones which tend to trade and retrade. And it's tended to be Red Plus because there's been some very large Red Plus projects. And so if you were to say, we're only going to include the verified carbon standard, so Vera credits with the CCB label, which is climate, community and biodiversity, you still have a pretty sizable, like in the millions of tons pool of credits. Whereas someone who is got a biochar project or, some people have been looking at institutional cook stoves, there isn't many of these type of projects and there's not much volume of credits coming out of them. So it's hard to create a trading instrument from those type of credit pools. There's a whole nother conversation to have about financial derivatives and hedging instruments emerging in the carbon space. I mean, I think kind of going back to basics, it's really, and I think, the larger audience is probably going to be perhaps corporates which are looking to procure credits and what considerations maybe they need to make. And it's only if you are buying on a long-term basis that you need to start thinking, how do we price that long-term contract? Do we just agree a fixed price today? So do we just say we're going to pay $20 a ton plus inflation and some inflation indicator for the next 20 years to the project? Or are we going to try and pay a market-linked price where we go and pay an index price that reflects the spot price at the time of delivery? And then there's different structures you can put around that price. We call it an S-curve or a floor and a ceiling to ensure that the project gets enough revenue back in to cover its costs. And then there's some kind of a sharing on upside if prices are higher. So there's many different ways to structure term deals if people are looking at that, or they can just buy spot where it's very clear what the price is at the time. And there's a very large volume of credits to choose from. And then the buyer isn't taking any delivery risk. So typically for spot, you will pay higher than if you've procured on a forward basis. But that, again, entails having some confidence in the direction that prices are going globally. And
yeah, and on that end, and please let me know if I'm getting way too speculative. I'm thinking that when you were talking about the commoditization of carbon, I think it's easy for a product, quote unquote, easy for a product like oil or gas, because we have a very specific use for that commodity. So it actually is, there's a market for that. But when it comes to carbon units and carbon projects, carbon credits, there's still a lot of regulations and debate whether how those credits can be used for offsetting someone's emissions or not. There's still a lot of debate what kind of emissions can be offset and what kind of credits can be used, which kind of credits are valid or not, which one is even verified credits. We have some cases where we are not certain about if they actually have a use. Do you think that this has an influence on this issue of finding a way to commoditize carbon?
So I'm really glad you brought that up. There's a second part that I should have really shared, in that I see the trend has been towards commoditization, but I think with the movement towards ESG, the traditional way of commoditizing commodities is actually changing significantly, in that people want to know exactly what they're buying. And what we're counting on is this newer trend of almost decommoditization, of someone saying that my oil is better than their oil because my oil has a lower GHG intensity and there's been less carbon generated in the process of extracting my oil than these other oil. And it's the same with gas. So those people which have the lower carbon intensity oil and gas, those people which you see in biofuels, that they have low carbon intensity biofuels, everyone's trying to showcase how their product is better than the next one. And so, what we're kind of doing with our tech is allowing people to really see the provenance of an order. So in the case of a carbon credit that's available, they can see not just which project it came from, but they can find out information about that project. And, over time, we want to increase the amount of data on the projects that people can access via the platform. And, where we're looking at other commodities, it's the same story. So, in the case of biofuels, for example, it'll be, what is the actual source of the products which have gone into that biofuel and how is it differentiated? And so I think traditional trading infrastructure, which really tries to just quote volume and price on a standardized product, doesn't really have the same place in all of these emerging kind of ESG commodity markets.
That's really interesting. And do you see, because I imagine this must require a very sophisticated approach to this sort of, especially towards pricing. Do you see any movements towards that in the industry? Any attempts that probably are not necessarily were successful, but are gearing the market towards the right direction?
How do you mean, sorry?
So, well, you mentioned that the traditional ways of commoditizing commodities doesn't really apply to the carbon market.
Yeah,
did I get that right?
I think it's possible to create a derivative market in carbon, but I feel it needs to be a financial assessment. And what's happening at the moment is a product that someone buys to make a claim is being commingled with a financial instrument. And those two things need to be separated. And at the moment, these baskets are creating a flight towards the lowest priced credit in the basket. Whereas I think a hypothetical price could represent a higher quality and a movement towards quality. Whereas at the moment, the way these baskets operate, because you can deliver anything that is compliant, the benchmark price represents the cheapest thing. And so you have one project in that basket have a bad news story come out about it, and it drags down the entire complex. Whereas if you were pricing a hypothetical project, you wouldn't be able to have negative press on one outlier impact an entire industry. So I think, and that's something else that we're working on at the moment in terms of benchmarks for the future. And, there's also a shift. So a lot of the demand we see is for high quality ARR projects, exactly the type of projects that DGB are focused on delivering. So, we think that you guys are in a really great space, that you're an exciting company to work with. I think that the credits that you start generating in the future, there will be a lot of demand for, because people are moving towards removals And yeah, people are recognizing, I think, that we can't just focus on carbon, that we need to look at broader biodiversity metrics as well. And a lot of people are very interested in the social benefits that come with it too.
Yeah, this is something that I find very interesting about our projects as well. Like that you can actually see the change that is promoting not only, of course, to the environment, which is a very important goal of ours, but also to the people involved in the project. You know, we have farmers that are able to better their lives because of the project that we're doing with them in their farms. Or we have, I mean, when you look at Cook Stove's projects, we have a very direct benefit on the health of everyone that is involved. So this is really, really exciting. But one thing that you mentioned that I found really interesting and I would like to ask you about is the fact that people are looking towards, you know, these nature-based, you know, removal projects. And this is the sort of information that, as a carbon buyer, and let's say I want to start buying carbon today and I don't know anything about the market. This is the sort of information that is very important for me to know. So could you tell me what kind of information is important for a carbon buyer to look after when they're selecting a project, selecting a product, or an asset to purchase, and where they can find that kind of information?
So a lot of people who are buying for their own use, their company's use, it's about what kind of claim they want to be able to make. And it's normally married alongside a budget. It's one of those things where, you know, it's been quite budget driven as opposed to saying, I want this type of quality. How much am I going to have to pay for it? It's more like, this is my budget. What's the best I can get for that budget? So that's the corporates. And I think that is still an attitude that many are forced to take at the moment. There are people who are putting quality thresholds in. So they still have some budget constraints, but they're also trying to meet some minimum quality thresholds. And they're not looking for the cheapest credits that they can find. They're wanting to use their whole budget, but they are, trying to find a blend of projects that, you know, there's a good compromise between quality and what their budgetary requirements are. And then you have people who are investing. So they're looking for a rate of return. So they're looking for credits which hopefully have a relatively low cost to produce and where there's a decent margin, even at prevailing prices. But the likelihood is if they're investing, they're quite bullish and hope that those prices will rise in the future. And they're looking at investing in the sectors where they see that highest potential growth. And then you've got traders and intermediaries who are maybe taking a shorter term view in terms of what do they think they can buy or what can they pick up cheap and sell on at a margin. And so there's different motives, which is why different types of projects are changing hands. And there's some people, I would say, you know, quite often like the tech companies, they have low emissions relative to their revenues and profit margins. So they're able to afford higher quality credits. Whereas, you know, large companies in hard to abate sectors, it's not feasible for them to take a dent in their emissions if they're only going to source these, you know, extremely durable, high degree of permanence, you know, very expensive carbon credits. And the market needs all. The market needs people at all levels. You know, we need to be supporting, you know, I'm a big believer in the Cook Stove projects. I think done and measured right, they're a great way of having a huge number of social benefits, the health benefits. You know, the idea that people are spending half their days collecting wood and lighting fires, you know, I've been on a glamping trip before where we had to light a fire for a dinner and, you know, spending 2 hours putting a fire together before you eat, and that's just for like one meal in the day. It's sad that we don't have better solutions for people. I once was speaking to a project developer who said in the last 10 years where he'd been developing projects, the cook stove technology had changed relatively little. There had been small advancements, whereas in the monitoring of the usage and collecting data, they had gone from using a clipboard and pen to an iPad. So, I think we do need leaps in our advancements in technology, but we also need to be realistic and deploy solutions on the ground which work today. I think there's a lot of this moonshot thinking, and a lot of people who are almost trying to reinvent the tree. It's like we've got something that works really well, and that we can scale, and it has a host of other benefits. And I think there's, to me, it's like preserving the rainforest. It's like low-hanging fruit. We should be doing all of that, and then we should be replanting everything that we've spent the last few decades cutting down. And if there's, certain places in the world where it makes more sense because the yields are much higher, the trees are growing at faster rates, there's places in the world where they get 3 seasons. And so it makes sense if we can deploy capital from the West and from places where, in the UK, trees grow extremely slowly, and to plant it elsewhere and have a global carbon market where this exchange of credits and effort is working at an international scale. It's more efficient. In the oil markets, if the oil price is low, you don't shut in the really cheap to produce wells and keep producing on the really expensive wells. In other commodities, the cost stack is really what drives the supply, whereas in carbon, it's just all over the shop. It's like you get everything and anything all at once. And when carbon prices drop, it doesn't necessarily mean that the more expensive credits drop in price. Certain project types seem to take the hit. So, since we've been collecting data, we've got like 3 years worth of data, and there's a sharp fall in the REDD+ projects. There's a sharp fall in renewable energy projects. ARR projects have largely held their value. And the newer vintages, I would say, continue to go up in price. Whereas, other sectors have really been hit by it. And again, it kind of shows a degree of immaturity and the fact that we aren't working all together to solve for climate. Everyone's kind of doing their own little thing and trying to make margins where they can. And, for me, we're trying to solve the problem of consumption with consumption, largely. So I think there's a big challenge in, trying to solve for climate change within this parameter of making money. While we do that, things are moving very slowly.
Yeah, I don't know if I agree with that, because I think that, I mean, probably I'm way too optimistic sometimes, and I think this is a flaw of myself, but I actually think that the market, the carbon market, and all the sustainability efforts are very, very of course, I wouldn't say fast. Fast would not be the word that I would use, but it's kind of astonishing. Like because this is a totally separate thing, but I was starting to put things into perspective, and my girlfriend is a doctor, and she was telling me that in the past, doctors didn't wash their hands or instruments. In fact, they believed that by not washing their instruments, they would get, quote unquote, the strengths of one person, like the good parts of one person, and be able to help another with that. So they would effectively do surgeries without washing their instruments, which is, in my opinion, completely crazy. And we've been doing surgeries for what, like 5,000 years? We have reports of, surgeries being performed in ancient Egypt. And it was only in 40 something in Hungary that one doctor realized that, wow, people are surviving more if I'm washing my hands. That's crazy. And started to hypothesize that. And only 100 years later, after the Second World War, that washing hands and instruments became really a standard procedure in most medical facilities around the world. So it took 100 years for doctors to start washing their hands. And when we look at the sustainability issue and the challenges that we have ahead, like we could say that this thought, like this issue, started to be noticed around the 60s, maybe 1960s, maybe 1970s, and I think we already have
extracting oil, coal, and gas the second they started burning it.
Yeah, I mean, the issue exists since people started cutting down trees to build ships, I think. But we started noticing it like only in the 60s, and already just like maybe 60 years later, we already have a carbon market, quite, it's just beginning and quite taking small steps and one at a time. But I don't know, I'm kind of optimistic. That kind of makes me optimistic because at least we're putting our attentions and resources into the issue, and we're looking into that and we're working towards that.
I guess there's a lot of debate happening though.
Oh yeah, definitely.
As opposed to action. There's a lot of people debating the quality, of each credit. And I think sometimes the attention is in the wrong place. So there's a lot of negative attention, as opposed to if you really focused on the fact that ultimately, and there's been enough research now to suggest that the companies which are using carbon credits and buying them are the ones which are decarbonizing faster. So beyond, what type of credits they're using, there is a much greater benefit than, just solely looking at, and I would say for a lot of this, you're looking at rounding errors on the grand scheme of things. And, there's definitely been, with technological advances, there's been the ability for projects to have, the insights that are required to have more accurate carbon accounting and measuring. And that will continue. Our understanding of how much carbon is captured in the soil, for example, it's an emerging field and people are still learning. And so I don't think that, people in 10 years' time can come back and criticize some of the soil carbon projects that we've got today, because we're doing the best we can with the information we've got. And we're doing quite a lot with looking at the Article 6 credits. And again, we need nations at the next COP to agree exactly on that framework and to move things forward. You see them nitpicking over, spending days arguing over a single word. And for all the time that they spend arguing and debating this stuff, no action happens. Whereas I think with any kind of startup or company technology, you just get going, you do something, and then you learn and you iterate and you improve and you keep going. So I think there's a balance between getting things right to begin with and moving forward and realizing that we are in a climate emergency. This whole race to net zero, I think, is the worst marketing campaign I've ever heard. The race to net zero 2050 is not much of a race. There's no racing. There is a feeling that we have until 2050 to fix this. And there's a hope that there'll be some miraculous solution. And if every year that passes, the miraculousness of the solution increases, what we need increases. And so for me, it's about trying to get people to see that we really need to do everything we can today. And buying carbon offsets is an immediate action point. It's something that literally anyone can pick up the phone to us and, can do it by the end of the day. But decarbonizing your supply chain, it takes time. Quite often people will have 3 to 5 year contracts with their suppliers. In the case of energy, in LNG, you have 20-year contracts with your suppliers. So it's not an easy or a quick solution. So I think if we can encourage people to use carbon credits, and even for your historical emissions, use carbon credits if you're making enough money for your historical emissions, because certainly any decarbonisation efforts aren't going to help with any polluting that you did yesterday. So I think we need to do all of the above. And then once you've got those decarbonisation strategies in place and action in place, you can start reducing the amount of offsets you're buying. And I think, if anything, paying for offsets up front and knowing that you're going to be paying for them each year unless you decarbonise, it's a good motivator for people to try and decarbonise faster. I don't think the people who say, it's just paying to pollute, I think that's the person that is accusing the person of having an excuse to do nothing and to deploy none of their cash or capital into these solutions.
And I mean, it's a cost, right? And if I'm not a huge businessman or anything, but when I look at a company and I look at a cost in a company, I think that every company wants to try to mitigate costs as much as possible and wants to increase, profit as much as possible. And when you're quote unquote paying to pollute, you're just increasing your cost a lot. And there is an incentive to, lower your emissions on that end because you want to decrease your cost. So,
and there's a lot of research being done on climate related risks, and I think there's a growing awareness, but again it feels like it's being shoved under the carpet, that we are all exposed, and most businesses have substantial climate risk, in the sense that if these natural disasters increase in frequency, there's a whole host of ramifications to that, generally, which all lead in much higher costs of inputs.
Yeah, that makes perfect sense. I actually just saw that happening in my state here. I live in the south of Brazil, and we had huge floods at the beginning of the year. So like 94% of the cities in my state just were underwater for 2 weeks. And I was lucky enough to live in one of the cities which wasn't the case. But I think it's becoming more apparent that these things are happening. And we have, every business, we had a whole state pretty much just halt their production, halt their business practices and everything for 2 weeks. That took a dent, and probably a dent that was much smaller than had any climate action been taken before. So I think that, it's a process that we're learning. I think what you said before is really interesting as well, when we're nitpicking things that, well, this is not really the ideal solution for this, so let's not say this is a solution. I think that this is a two-edged sword. When I started going, working out and going to the gym, I wanted to do the perfect workout. And my trainer just said, look, man, you just have to start doing a workout. You're not going to do a perfect workout right now, but it's still better for you to start working out now. You're going to reap the benefits and you're going to improve over time. When we built a computer in the 70s, it certainly wasn't the best computer that we could build as humans, but it was useful until now. We have like one of the best, and I'm pretty sure that the computers that we use today are going to be rubbish by 10 years. And it's certainly the computers in 10 years are going to be rubbish in 5. So we're always improving and finding better solutions. And I think that if we're nitpicking on every possible issue, then that just, kind of immobilizes us and makes us, not move forward, essentially. So Melissa, for my final question, I think that we went through very different topics and through a lot of different, very interesting things. But I do have one final question for you, which is, well, you've been in the carbon market for a couple of years now, and I guess you already saw some changes happening. What is your view for the near future and maybe medium future in the carbon market? So let's say for the next 5 and next 10 years, what can you see, or what can you imagine happening in this market?
So I think that the Article 6 credits and these kind of quasi-compliance markets will be large areas of growth. I think if we can get more governments like the Singapore government, Colombian government, who are encouraging people to use credits generated from projects on the ground for a small portion of their carbon tax obligations, that can be really constructive. And the carbon market at the moment, the voluntary carbon market, is so small on the scheme of things that it wouldn't take a lot for it to grow tenfold. And so, I think this term voluntary carbon market, I prefer what people said, the verified carbon market. And I always say we sell verified carbon credits, because whether it's voluntary or compliance is the use case. And I think you'll get more and more credits which can go into either a compliance scheme or voluntary. I think in the voluntary space, we continue to see a flight towards quality, and we continue to see companies wanting to go after and claim premium projects. And in the compliance space, oddly, you get a quality threshold, but once that quality threshold is met, people are happy to buy the cheapest compliant credit. So I think you'll see a mix. And then maybe the really cheap stuff will, again, continue to help people with a very large volume of carbon to abate. That's hard to abate, that they need to compensate. And, you can't afford to just buy expensive credits. And you'll see people blend in some of the cheaper stuff with the more expensive stuff. And then anything that is at the bottom of the cost stack, and what we were talking about before, which is more normal, that goes into these compliance markets or quasi-compliance markets, they become then the benchmarks as well for the rest of the industry. So I think we'll see a CORSIA phase 1 benchmark emerge, and we will see, I think there'll be some other benchmarks, and it could be that there's like a Singapore tax. Right? So these are obviously capped at the Singapore tax level, but you'll see a price emerge for Singapore tax compliant credits and things like this. And hopefully the EU and some other much larger than Singapore trading blocks or countries start joining in with the international carbon market and space, and help try and move some of the capital from the global north to the global south, which for me was the point of the carbon markets. The point of the carbon markets was a recognition that those suffering the blunt of climate change are, in general, those who did nothing to cause it, and that we need to help. And, I think the countries in which money can have the highest climate impact is often not our own. We have to be willing to look for those opportunities in other countries.
This was my conversation with Melissa Lindsay. Thank you for joining us today. The Green Earth Podcast is a DGB Group initiative. DGB is a large-scale, nature-based project developer, and our goal is to help nature flourish and prosper. If you want to read more about the carbon market and want to explore more about our projects, please check our website, green.earth. The link is also in the description. If you enjoyed this podcast, please consider leaving us a review. And if you know anyone that might benefit from this content, we'd greatly appreciate your recommendation. I'm Pedro Zimmer, your host, and I hope to see you for the next episode of the Green Earth Podcast.